Ever dreamed of catching not just one, but two unstoppable market waves at once? On one side, artificial intelligence, the hottest revolution on Wall Street, birthing trillion-dollar empires and changing the game at lightning speed. On the other, the old-school comfort of seeing real, hard cash drop into your account quarter after quarter, dividend income, compounding your wealth day after day. But let's be honest, how often do you find tech darlings that are also dividend machines? Is this combo just a unicorn, or is it finally becoming reality as we head into 2025? Welcome to Dividend Surge, your YouTube launchpad for uncovering the secrets of turning market hype into lasting income. Today, we're diving straight into which AI stocks actually pay out juicy dividends. What makes this combo so rare and so powerful? How do you build a bulletproof, future-proof AI dividend portfolio? And at the end, a surge spark analogy you won't forget, plus actionable tips for your own investment game. Ready to ride the next wave? Smash that like button, subscribe if you want to build real passive income, and comment your AI pick. Now, hold tight. Let's rocket into the future of dividends. The AI takeover on Wall Street. Picture this. You open the news, and everything's about AI. From tech podcasts to your finance group chat, it's all about NVIDIA, Microsoft, Alphabet. These companies, turbocharged by breakthroughs in machine learning and big data, have pushed the S&P into nosebleed territory. But here's the catch. Historically, tech hypergrowth almost never meant dividends. Amazon, Alphabet, even Tesla. Total zeros on the dividend front for years. Wall Street's message was always, reinvest every penny for more growth. But 2025 is different. These companies are now printing so much cash, they actually have to start sharing the wealth. And suddenly, dividends isn't just an old economy word anymore. It's back at the heart of tech strategies. Why AI plus dividends is so rare. Why do so few tech companies ever pay dividends? Because for decades, every dollar went straight back into research, new products, and gobbling up startups. For an AI company, standing still was death. Things changed with tech's second big financial maturity. Apple waited nearly 20 years after going public to pay its first dividend. Microsoft took over a decade. Only once businesses reached massive scale and literally couldn't spend all their cash did they finally open the dividend spigot. With AI, this cycle has sped up. Investors are now demanding both growth and a share of the profits. And guess what? The best-run AI leaders are rising to the challenge, combining Wall Street's sizzle and reliable income. The secret of mature AI dividends. Here's the inside edge. Don't chase the wildest and proven AI startups. Focus on companies that already run the digital backbone of the world, who've absorbed AI so deeply that future profits are practically baked in. These companies have global scale so they can weather storms, run essential AI infrastructure, semiconductors, cloud hardware, industrial sensors, have ironclad customer contracts and diversified revenue streams. Crucially, they have a long track record of stable, growing cash flows and a track record of rewarding their shareholders. That's the intersection where the best AI dividend stocks live. The ones giving you both the upside of innovation and the comfort of consistent, growing income. Let's start right at the top. Microsoft. Growth and profit. Azure is the #1 cloud platform, now fully turbocharged with AI. Copilot is in Office, Bing, and Teams, propelling profit growth above 15% per year since 2021. Microsoft is a true dividend achiever. 19 consecutive years of rising dividends, paid every quarter with a current yield around 1%. That might sound small, but for long-term holders, the yield on cost now tops 2.2%, with compounding in full swing. Stability, clear payout ratios, 25 to 30%, mean there's room for more dividend hikes. Fun fact, in 2024, Microsoft returned $100 billion to shareholders through dividends and buybacks, the biggest in its history. If you want both exponential growth and rising income, Microsoft isn't just a tech blue chip, It's like owning both a rocket ship and a cash machine in your portfolio. Broadcom, the dividend surprise in chips. Here's the underdog story. Today, Broadcom is the go-to chip provider for the biggest names in AI and cloud. Its hardware is everywhere, from enterprise data centers to next-gen servers. Dividends. From 2010 to now, Broadcom has multiplied its dividend, increasing it by double digits annually and keeping payout ratios healthy. 2025 highlight. The company just launched AI-linked dividends, shareholder bonuses tied directly to the growth of its AI segment. Stock surge. Broadcom's share price tripled in 30 months, making it a favorite among dividend-focused institutional funds. In short, Broadcom lets you ride the AI hardware wave and get big, growing dividend checks at the same time. Qualcomm, the silent brain behind AI. Beyond phones, Qualcomm sunk billions into edge AI, embedding intelligence into cars, industrial robots, and factory sensors. Dividends. Qualcomm boasts 22 straight years of unbroken dividend growth, 2.2% current yield, raising payouts by about 6% per year, even as tech whipsaws. Market growth. With everything moving to connected devices, Qualcomm's edge AI addressable market is exploding. Vision 2025. From car dashboards to industrial automation, more and more companies are signing up for its AI-powered chipsets and platforms. Want to quietly build wealth and get paid for the privilege? Qualcomm might not make headlines daily, but it could be this silent engine that powers your dividend rocket. Let's talk ancient tech, Texas Instruments and Cisco. Some call them dinosaurs, but their balance sheets and innovation say otherwise. Texas Instruments. Nearly 20 years of undisrupted, rising dividends. Above average yield, recently clocking in at 2.7%. Massive player in industrial AI, sensor chips for automotive, factories, IoT. Cisco, nearly 3% yield. Key player in AI-powered networking for enterprise, data centers, and cybersecurity. Backbone of big data infrastructure from Silicon Valley to Europe. What's the secret sauce? Both companies have transformed their boring business, using their scale and cash to power next-gen AI, all while protecting and increasing their dividend payouts. If you want a portfolio anchor, one that's sturdy, reliable, and still riding the AI wave, TXN and Cisco are great ballast for your dividend strategy. Building the perfect combo portfolio 2023 to 2025. Let's turn theory into hard numbers. If in January 2023, you split $10,000 equally between MSFT, AVGO, QCOM, TXN, and Cisco. Capital growth. That portfolio would now be worth about $15,900, a 60% gain, outpacing the S&P and NASDAQ. Dividends collected. Nearly $500 in pure cash dividends over 2.5 years, not counting reinvestment compounding. Current yield. Now yielding about 2.5%, with most of these stocks increasing dividends each year. Volatility. During market panic, like interest rate hikes or AI backlash headlines, this portfolio dropped less than the pure big tech index and bounced back faster. The bottom line, you could have caught the AI innovation wave and enjoyed dividend income that just keeps growing without losing sleep and enjoyed dividend income that just keeps growing. Surge Spark, the hybrid rocket analogy. Imagine your portfolio as a twin thruster rocket. The first engine, explosive stock price growth, high and fast, fueled by the AI craze. The second, an inexhaustible tank of dividends, kicking in even if the market cools off. If one engine fails, say, a market dip, the other keeps you flying, you don't fall back to earth. That's why, for serious wealth builders, AI dividend stocks are the hybrid rocket of modern investing, blending new world excitement with old world financial wisdom. Hot 2025 updates, new dividend moves. 2025 just delivered a bunch of game changers. Broadcom, bonus dividends now tied directly to AI revenue milestones. If the segment smashes expectations, shareholders get extra payouts. Microsoft increased its annual dividend by 10% after breaking new records in Copilot, Azure, and gaming earnings. Qualcomm announced another colossal buyback and hinted at an even fatter dividend coming in 2026. TXN and Cisco pushing deeper into industrial automation and private networking for AI, locking in earnings and insulating their dividends against tech cycles. If you want fresh news, understand this. 2025 is shaping up to be the best year yet for AI-powered dividend picks. Don't forget the risks. Be smart. Let's keep it real. Volatility. AI stocks are still trendy and news-driven. Expect sharp dips on bad headlines. If a 10% drop would make you panic sell, maybe skip this sector. Yields aren't sky high. Even the best combos hover between 1 to 3% yield eventually. Don't expect utility stock payouts. Concentration. Most strong AI dividend plays are still clustered around 5 to 10 megacap names. Diversification is vital. Regulatory threats. With global governments eyeing AI for privacy, ethics, and security, new rules or fines can hit profits fast. Valuation. AI darlings often trade at high price multiples. Cheap on the future, pricey on current earnings. You must believe in continued leadership. Bottom line, only invest if you're prepared to hold through the swings. Focus on rising dividends and ignore short-term noise. Step-by-step Surge Guide, your AI plus dividend game plan. Ready to build your hybrid income growth machine? Here's your knockout checklist. Pick at least 3 proven AI giants. Balance infrastructure, TXN, AVGO, CSCO, with platforms, MSFT, QCOM. Opt into DRIP, dividend reinvestment, let each pay out by you more shares. Compounding is your superpower. Watch quarterly results. Is AI driving earnings? Are dividends rising? Adjust your positions accordingly. By the dip, top quality dividend payers usually bounce back first after tech panics. Pounce when others are scared. Avoid mirage, high-yield techs. Make rock-solid names, the blue chips, your base. Only gamble on new, unprofitable small caps if you love risk. Surge alert. Small caps and micro caps. Worth it? How about turbocharging your core portfolio with a dash of risk? Let's talk small and micro cap AI potentials. Potential upside. Some, like UiPath, could explode if and when they reach profitability and start dividend programs. AMD was once a small cap. Look at it now. Risk, sky-high volatility, concentration risk, and a real chance that only the biggest survive a tech down. Hypothetical example. Imagine Opti AI, a tiny, groundbreaking computer vision startup. It lands a mega retail contract, stock triples. If it starts paying dividends, early holders cash in. But if revenue stumbles, you're left holding the bag. Portfolio fit. For most, limit small/micro cap exposure to no more than 10 to 15% of your investments. Let the blue chips secure your base. Bottom line, for thrill seekers, small and micro caps might deliver fireworks, but treat them like extra hot peppers. A little spices things up, but too much will fry your whole dish. You should use this strategy. The AI dividend hybrid isn't for everyone, but if you want long-term growth and a defensive income cushion, can handle bumps in the road without panic selling. Value both the excitement of change and the comfort of growing passive cash flows. Like the idea of your portfolio working overtime via dividends, even during flat markets. This strategy could be your ticket to serious wealth building and peace of mind. The AI revolution is barely getting started. For the first time, it's possible to profit from the leading edge of technology and collect real, reliable dividend cash at the same time. Here's the plan. Track top AI payers for future dividend hikes. Reinvest those payouts for faster compounding. Blend growth with income. And sleep easy knowing your wealth is working hard in every market. Next episode, get ready for a deep dive into a red-hot automation small cap. Is it destined to join the AI Dividend Hall of Fame? Or will it fizzle into just another short-lived trend? Don't miss it. If you got value today, hit like, subscribe, and let's hear from you in the comments. Which AI dividend stock do you already own, and what do you want covered next? Here at Dividend Surge, where the waves of passive income never stop rolling. See you on the next ride.